This is your LMAX exchange technical update for Monday, June 19th, 2017. Euro dollar. So the euro continues to consolidate off recent 2017 highs, and the market is now trying to decide whether it wants to continue higher towards next key medium-term resistance in the form of the August 2016 peak at 113.67, or if it wants to see a bit more of a correction before it continues with what has been an uptrend since 2017 lows down at plus 14-year lows from January of 2017 at 103.41. If we see a breakdown below 111.10, that would trigger a double topish type formation, opening the door for a pullback towards 109.25, from where a higher low is then ideally sought out in favor of a bullish resumption. But if we're unable to establish below 111.10, the more immediate pressure continues to remain on the top side for a push up towards that next key resistance at 113.67. Sterling dollar. So cable has done a good job holding up into dips after the market had broken down below that previous critical range resistance at 127.75 that had capped the market so well for several months after those plus 30-year lows from October of 2016 at 118.40. The breakdown thus far has been supported down into the 126 area. There is still risk though for a deeper pullback, potentially towards the 125 area before the market looks to head higher. But heading higher seems to be the more stronger outlook from here following that break in April above 27.75, which exposes a measured move eventually up towards the 135 handle. At this point, it would take a break back below 123.60 to delay the newly adopted constructive outlook for sterling dollar. Dollar yen. So dollar yen has seen a nice bounce over the past few sessions, but overall the pressure does still remain on the downside while the market holds below that 112.13 high that we had seen going back to the 24th of May. And there's risk for another topside failure and resumption of declines down towards the 2017 low just ahead of 108. If we do see a break above 112.13, it will delay the bearish structure. It won't negate it, and the market would still need to break back above 114.37 to force a shift in the structure. So overall, while we have seen dollar yen bounce, it doesn't necessarily mean that this market's going to be heading much higher, and there's still risk for the market to continue lower back towards the 2017 lows. Euro Swiss. So Euro Swiss has done a good job being supported into recent dips, but overall this is a market that's been very well capped at the same time ahead of psychological barriers 110. While the market holds below 110 on a medium to longer term basis, the pressure remains on the downside, and there's still scope for additional weakness back towards the major lows that we've seen, medium term lows around the 106 area. It would take a clear break above 110 to force a shift in the structure. Aussie dollar. So Aussie has come up in recent trade and has broken back above some important resistance in the 76 area, and we'll be interested to see how the market responds as it trades above 76. If it's unable to hold above 76, then there's risk for another topside failure and resumption of declines eventually back down towards those lows that we saw in early May around 73.30. If, however, the market can establish above 76, it will open the door for a push back towards the 2017 high at 77.50, which also coincides with some significant medium-term resistance up towards the 78 area. Dollar CAD. So dollar CAD has seen some sharp setbacks over the past several days since that market put a top in, a 2017 high in, all the way back on the 5th of May at 37.94. But overall, on a medium term to longer term basis, this is a trend that's still quite constructive, and so dips should be supported down towards 130 if this weakness continues. We did see a break below 132.20, which delayed the more constructive outlook, but again, overall things still look constructive, and any additional setbacks that we do see from here should be very well supported into the 130 area in favor of an eventual resumption of gains back towards and above the 2017 high at 137.94. Kiwi dollar. So the New Zealand dollar has seen a very nice rally out from 2017 lows in the 68 area, trading all the way back above 73 thus far. There is a lot of good, strong resistance up towards the 73 to 74 area, and so it will be interesting to see if these gains can hold up. If we, however, see a break back below recent support now, which comes in around the 71.85 area, that would do a good job of putting the pressure back down on the downside and accelerating declines. SPX 500. The S&P 500 is consolidating off fresh record highs, but since we broke out above 2400 several days back, that opened the door for a measured move extension towards 2480. That 80-point extension comes off of the move that we had seen from 2400 down to 2320 earlier this year. That's an 80-point move, and so the breakout projected 80 points to the top side, which takes us up potentially to 2480. It would take a break all the way back down below 2320 to force a shift in this structure. Gold. So gold has seen some setbacks over the past several sessions, but overall this is a market that remains highly constructive, putting in higher lows and higher highs. And so any setbacks that we do see over the coming sessions should continue to be very well supported, ideally now ahead of that previous higher low in the 1215 area, in favor of a continuation of gains beyond the 2017 high around 1296 and towards a retest of the 2016 peak at 1375 further up. Only back below the 1215 area would compromise this outlook, and any additional setbacks should ideally be supported into the 1230 area.